Hello, YouTube. Welcome back to Both Catchers channel. Definitely happy that you guys are able to stop by. Happy to see you guys again. I've been gone for a while. Definitely been, took a little hiatus. Was working on some personal stuff, and also was working on revamping my website, things like that. So obviously, over this past month, we had a lot of news come out, a lot of things going on with the war, and a lot of things going on with the market. So definitely happy to go back in here, go over the charts, check in with you guys, and just to discuss what's going on in the market and the economy. So let's go ahead and dive into it. So we're gonna go first start with CPI. So CPI, we had that come out last week. We did know that inflation went up to 3.3%, which is kind of expected, especially with everything that's going on with the war, how that's affecting oil prices. Obviously, if you drive a car that takes gas, you obviously felt that at the pump. See, I think the average gas price now in the U.S., I think it's over $4 a gallon. So obviously, some high areas it's much higher, like places like California, probably New York, stuff like that, for higher um, income areas that need a higher wage to just survive. But yeah, so definitely all the stuff going on with the war has not been to the benefit of the consumer, obviously. So this is definitely hurting us. And again, we haven't seen the full effect of all this, right? So the oil that has already passed through the strait before all this, that was already, sent out weeks before the war, months before the war, stuff like that. So that was already on its way. It's the stuff that's going to happen next quarter, going into summer, going into fall, that's really going to affect us because those shipments haven't been sent out or they're being stalled and things like that, right? So it's not to fearmonger, but it's bad now, but it's most likely going to get worse, right? Even if a deal is reached, even if we do come to an agreement, whatever the case may be, it's still not something that's going to be fixed overnight, right? They can shake hands, agree not to do this, agree to do that, but these past 6 weeks of not getting shipments through, getting the same volume of ships that were passing through that strait, is not going to get rectified overnight. It's going to be something that's going to take multiple months to go ahead to even try to get back on standard and back to normal, right? So with the CPI showing this, showing inflation's going up, right? Obviously, it's not what the Fed wants, and obviously we're gonna have a new Fed chair come in, Kevin Warsh. He's someone that isn't supposedly particularly dovish, as in like quick to cut and all that stuff. So he's probably definitely going to be. He's perceived as more of a hawkish Fed. So definitely, I feel like it would be safe to say that rates are probably going to stay where they're at, or they're probably going to get hiked. Rates get hiked, not good for the market because obviously we don't want higher rates because higher rates mean money is more expensive. So we don't want that to happen, right? We want money to be cheap to be able to go ahead and buy loan, get loans, things of that nature, right? So higher rates is going to definitely slow down the economy even more. Obviously, the economy has already been slowing down. We've been seeing the job numbers. Um, Job growth is pretty much flat. Things are not looking good. Things are not looking good for the long term as of right now, right? For the everyday person, everyday consumer. And again, back to this whole situation going on with the Strait of Hormuz, there is also other effects where it's affecting our farmers. Them getting fertilizer. There's already been an issue with that, and food shortage. Again, from reports, seems like it may become an issue later down the road, a couple months out from now. So definitely, if you can stock up on stuff right now, if you can, definitely better to be with than without. So even if you ever get like a month worth of supplies for you and your family, definitely go ahead and try to look into doing that or building that plan out for you and your loved ones. Um, but yeah, farmers are looking like they're having a tough time, which is going to lead to the consumer having a tough time being able to put food on the table. Um, Helium, they didn't know that was going to be a big issue this year, but helium, big factor in the AI build out into these semiconductors. That's also being affected by this. So Definitely interesting what's going through, especially for the self-inflicted situation. Strait of Hormuz was open, free flowing, no issues, high volume throughout the day. Shipments going in and out has now become a choke point that is 20% of the world's oil that many probably didn't expect to see coming. This situation, Iran definitely is in the driver's seat. I feel like in the situation, and obviously it is 9 o'clock at night. I did record this video already, but my frame was messed up for some reason, so had to redo it to make sure you guys can see everything on the screen. But by now, obviously, if you've been paying attention to the news, you know that the peace talks basically have fallen apart. Um, yeah, so it's looking pretty bad. So we're gonna tab over. Let's go ahead and see what's going on. Earlier, we had an Asian session open up lower, obviously because of this news. Oil prices surged above $100, and then we had the administration go ahead and put out a statement saying that they are going to be sending basically the Navy to blockade the ports for Iran and also go out there for the Strait of Hormuz. That's supposed to go into effect 10 a.m. tomorrow, the 13th, so Monday. So that's obviously not good news either. So hopefully it doesn't escalate to something like a battle on water, naval battle between these two countries. Definitely don't want to see that. And then it spiral into like boots on the ground, stuff like that. We definitely do not want to see this escalate any further because it's not going to be good for either side, but definitely not good again for the everyday person, for the consumer. Because at the end of the day, that's who it is affecting. These higher gas prices, excuse me, higher oil prices, all those costs are going to be passed on to us. They're not going to get absorbed by the corporations, by the companies. They're going to just get passed on to us, right? And make our lives harder when we're already dealing with enough on a day-to-day basis. So definitely over the next, I don't know, we probably call another 6 weeks. Hopefully something gets situated. But again, this is self-inflicted, and that's the part that makes it very, very disappointing, very annoying. That it's just self-inflicted. So I'm gonna touch the fear and greed index. So we see here, fear and greed's at 38. A month ago we were at 20. That was some good opportunity there to go ahead and make some purchases in the market if you had some dry powder on you. And then we can see here from the market momentum indicator, the S&P 500 with the trailing 125-day moving average. So last video, we are either right at the line or right below it. And then you see we dip down even further to close out the month of March. And then past few sessions, we rallied back because obviously middle of last week, we had the peace talk that, basically got cemented Tuesday night, I think it was, and markets rallied Wednesday morning based off of that news. But again, it was news. Peace talk or the ceasefire, whatever you want to call it, lasted for, I don't know, I think less than 6 hours, less than a day for sure, before it started falling apart and then back and forth between the U.S. and Iran. But this wasn't met, this agreement wasn't established, and yada yada yada. All to say, it was short lived. Markets rallied basically off of that and stayed pretty strong. I'm not going to lie. So we're going to go look at the charts and see that reflected. So we have the S&P 500, we have SPY, ETF up. We can see here we were trading down, especially throughout all this time dealing with the war issues. We fell to the 253 moving average, hugged that, traded above it, and then when that ceasefire news came out, that agreement was reached, or a ceasefire reached, I should say, we gapped up, and now we finally closed above all the moving averages, right? So we're only about 2 to 3% away from all-time highs, which is crazy to say, especially given the environment that we're in right now, with very high geopolitical tensions and the market being where it's at right now. It's safe to say it doesn't make any sense, is what I'm going to come out and say. This right here, falling to the 253, that makes sense. This is how, from you see this drop all the way down to here, makes sense. Even if it went lower, makes sense, right? Because of how bad it is. But again, the market in real life and the economy usually are disconnected, right? They usually don't move in tandem with one another. So that's what we're seeing happen right now. So, and then you see for RSI, we're at oversold when it fell to that 253 area. So again, good opportunity if you're looking on the daily chart. Weekly, I think we just fell to the 50. So, 72. So that was another good opportunity there. But again, I'm someone that likes the 100 or anything below it. But 72 is a good opportunity as well. So I do have it marked out here, 72 and 58 as moving averages to look at for the weekly as well. Because those are good opportunities as well for short term. But did see the SPY react nicely to that and bounced up again, 2 to 3%. Within the high, we almost fell into correction territory. With the S&P 500, I think we got to 8 or 9%. So we almost were there. Excuse me. I'm pretty sure QQQ did fall to correction territory during that time. So correction, remember, is 10% off the all-time high. Sorry, look daily for QQQ. These charts are pretty much going to mirror each other. So QQQ, same story, 253 moving average, hugged around there, got above it, then gapped up off of that news. Same thing, RSI signaled oversold for an opportunity there to get into it. Let's go ahead and look at the weekly. Weekly should show the same thing. Touched 72, bounced up, same thing. Pretty was it? Where we at? $26 away from the all-time high. Same thing, very close to it. IWM is the only one that's a little different because you're gonna see their weekly charts a little different. But we do have the daily here for the Russell 2000. So Russell 2000 dropped to the 200 as support for it. Same thing though, news came out for that ceasefire, gapped up, and then $10 away from the all-time high. And then we go for weekly. I think for weekly it didn't even touch a moving average, which is very intriguing to me, especially for something that should have sold off harder, right? But it held up fairly well throughout this whole situation going on. So they even touched the 50. When we see the other names that they fell to key levels, this one held up pretty well as a small cap name. So let's go ahead and look at, again, to the beneficiaries of this, or one of the beneficiaries was the energy sector. I know last video we talked about XLE being someone to benefit as a sector. They definitely did. Kind of last video, we didn't hit all-time highs yet with it. I think we were heading towards. They were either at $60 or around 59. I recorded that last video, but definitely we could see how this ran up to all-time highs, 63.46. Then we had that sharp sell-off and fell to the 50-day moving average. So to touch on energy, oil, they move in tandem. So when oil was at $100 or above, XLE, the energy sector, was moving in tandem with it. So oil gets above that price, XLE was going up in price. Oil plunged below $100 when it fell down to $95, $90 based off that ceasefire talk. XLE also plunged, right? So now we see that oil is back above 100 based off of this, failed plans and this peace talks falling through. It's safe to say that tomorrow when the market open up, XLE should be going towards the green or should have a nice move upwards, right? Especially this is a pretty key level right here for the 50-day. So bounces off of that, already bounced off it before. Last session, Friday, we closed right here. Safe to say that's probably going to bounce off of that, especially with this news that came out. It's going to bounce up. So definitely look for that to happen tomorrow for it. And then let's go ahead and look at the weekly. Weekly for XL, you should still be way above all moving averages. As you can see here, still way above all moving averages. 50-week moving average is 46.79 is your next opportunity. But again, we just fell out of the overbought territory. So XLE is still very, very overextended. And then when we're touching on Iran and their situation, which is my thought about this being very difficult for them to go ahead and pretty much agree to anything. It'll be kind of difficult because especially now they turned that Strait of Hormuz. Reason we're looking at Bitcoin because of the cryptocurrency play that has been reported on is they're supposedly taking payments in cryptocurrency. Who knows what type of cryptocurrency? I'm obviously gonna look at Bitcoin because that's the only one I really do care about. But for them to take payments for, they basically are treating the Strait of Hormuz as a toll road, basically, right? So to get safe passage, you're paying a fee. You're paying a $2 million fee, is what the number has been reported, to get through safely onto the other side. Companies are people, corporations have been paying the fee. That's why the term of, oh, it's not really closed. So it depends on what you mean by open when you talk about the strait. So before all this, the Strait of Hormuz was open, as in free, safe passage in and out. There's no issues, there's no problems. Everybody was just business as usual. Right now, yes, there are some ships coming through, but it is under reports, allegedly they are paying for that safe passage, right? So if Iran is being able to turn this natural environment that is not man-made, it's naturally how the environment was, but they're able to flip it and change it into a way that's going to boost them and boost their economy and boost their income for whatever they need. I don't see them easily giving that up because it's like, again, it's like they're playing chess. The situation was brought to them. You know, U.S. and Israel attacked them first, and then they've been able to flip the situation into pretty much, to their benefit. So now it's like, I know y'all seen the tweets and the retruths, whatever they call them, from the president. Open the effing straight, like with the expletives and cussing and everything. Very presidential, by the way. That's definitely a great way to represent us. But doing that is also, I feel like, showing that, oh, damn, Iran really has the power now for you to go online, act like that, and basically demand for it to be open like that, cussing and all that, basically having a hissy fit. Again, self-inflicted. I don't know. It's just it's looking really bad. It just looks terrible, bro. I don't know. But to go back to cryptocurrency is believed to be the way they're taking in that those funds are, I think, being paid in Chinese yuan, Chinese currency. But that also wanted me to look at crypto for Bitcoin. So we see Bitcoin finally has established above the 50-day moving average. So traded above it and has been closing above it the past few sessions. That's good. Next point of resistance is 75,962. So you break past that, that's pretty good. And then obviously 79,000 is the next movement. I'm just going to jump straight to the quarterly versus going through each of them because I like looking at crypto on a higher time frame. I think last video we talked about. Hold up, where am I at? Crazy. They lost me in there. So let me go down to weekly and then go back to quarterly. 1, 2. There we go. All right. So then we talked about first quarter of this year, Q1. We were saying that we want Q2 to be most likely within this candle. Looks like that's what's happening. So we're still early April, about hit mid-April, I should say. So us staying inside this candle right here from first quarter is a good sign. We do not want to break below 62,850. Break below that, then we're gonna be heading towards the bottom of this candle, which is 58,945, right? But us staying inside here for this quarter, probably even going up, but staying inside this, pretty good. And then the next quarter going into summer, hopefully we continue to ride out towards the top. But that's how crypto's looking for crypto fanatics. And then let's go ahead and look at gold, which has been recently had a nice little run up. But obviously, we do remember here back in late January, early February, where we had this huge sell off for gold and silver. Then it traded, ranged around for a little bit, then all nowhere fell below all moving, not all moving averages, but the 50, 72, and then to the 100. And now it's been kind of finding home around the 100 moving average, right? But that finding home there has been after it fell below, then it ran up a little bit. So definitely a good area probably to, nibble in all that stuff, build some positions. But again, you didn't want to be this person who bought at 509 for it to drop all the way down here. That's why I strongly believe don't chase, wait for key moving averages to build your position, whether that's on the daily, on the weekly. I prefer the weekly, but the daily is there for you to definitely find some good opportunities to build or start a position. But that's where gold is right now, and that's how gold is moving at the moment. Weekly, obviously, we're going to be way above still all the moving averages. So for the 50, for an opportunity, it's 369.80 for gold. But again, the person who had bought gold at a key moving average is the person who bought way back here around, what is this, fall of 2023, right? That's the person who really came up on it. So that's what, 170-ish. They had got it 170, 180-ish, and now it's at 437, ran up to 509. Because again, knowing the preconceived notion is you don't buy gold for it to grow, right? In terms of like a growth stock or a growth index or growth ETF, stuff like that. Buying gold is to preserve capital for the most part. Gold has exploded, especially recently because of all the geopolitical tension, the the negativity around the dollar, things like that. The safe haven of gold has now become almost like a growth story. So basically, that's why gold has exploded because it's like the right recipe has been created in the environment for gold to explode, and also stuff like silver to explode, copper, things like that. But obviously, I feel like gold is the best out of all those. If you're going to look into commodities, gold is probably the best one to go with. But again, the initial basis of gold was to basically preserve capital. So if you didn't have exposure to it, probably look into getting exposure. Again, it's not financial advice, but don't look to get it right now at these high elevated levels. When they hit the 100, probably there. But again, you want to be like the guy who I showed, the guy or the gal who bought at the 170, 180 back in fall of 2023. That was an opportunity to buy. So up here, I feel like you're just gonna get burned. So again, someone bought at 509 and got burned. So don't be that guy. Use your moving averages, use your indicators, whatever system you believe in. So the goal is to buy a good price. So same for silver, pretty similar story. Had a huge drop off late January, early February. Same thing, dropped to the 100. Acted as kind of resistance, still is acting as resistance, right? Because we're kind of right at it. But again, on the daily, opportunity to go ahead and nibble in, build a position. Then we'll look at the weekly, same thing. Still strongly extended, in my opinion, above all the moving averages. If you were to be interested in it, basically $50. So at the 50-week moving average, that's a good opportunity. 72, 43, 43, and then the 100, basically $40. So those are the three good opportunities, in my opinion, for silver. And then let's go ahead and look at a name that has moved kind of violently, but also has come back in a great way. So we got Micron. Obviously, we know the story about them going up the ranks insanely, and then as soon as we hit that all-time high after their earnings, right here on what that March 18th, they had an all-time high. Then out of nowhere, the bottom fell out, fell all the way to the, what would you know, the 100-day moving average, right? So again, great opportunity. Fell to the 100 moving average. People bought up, absorbed it, and all of a sudden now we're back above all moving averages. Not to say that this is always like a full proof plan. False moving average, boom, it's going to be guaranteed to go up. No, it's just the moving averages act as a good indicator for you to go ahead and build a position, to probably nibble and go ahead and start putting some dollars towards that name. If it's a name that you like, great company, great fundamentals, great story. Because as we know, this whole drop off right here, that's people taking, in my opinion, that's people taking profit. That's people saying, "Hey, man, this name ran up so much from year to date and from the past year. This name has been doing great for my portfolio, been great for my whoever institutions. Like, hey, we ran up a bag on this. Let's go ahead and take some profits." All right, that's how I'm looking at it as, right. Took profits, closed out some positions, and then people here, I was waiting for this opportunity to get into it, run it back up. So they're either going, and they're probably still going to run it back up to 471, or they're going to run it up even higher. And the story still might repeat again. Because again, this was the previous all-time high. And what happened? Sold off. Then they didn't hit all-time high again until about right here and here. What happened? Sold off. Absorbed. Now we're running it back up again. So that's just in my opinion, that's just profit taking. That's just people like, it's a great company. Again, the story has not changed for Micron in terms of memory. We still need the memory. Same thing, the story hasn't changed for SanDisk and all these other companies that are benefiting from, the demand in flash memory, high bandwidth memory, things like that. Again, the story didn't change, and you believe in your investment, use these as opportunities to go ahead and average down into. Someone has been watching Micron for about a year. Bam, I can't find an opportunity. Now it's your opportunity to close out March right here. This is your opportunity. Look at the weekly, obviously, still super extended on the weekly. So no opportunities there. And then the opportunity is pretty much a far one if you're going to wait for it on the weekly. 228.15 for the 50, for the 50-week moving average. And that's not to say it's not it's impossible. It's not going to happen. It can happen. It's just about being patient. It's about waiting. But by that time, who knows? The story might change. But again, if the story stays the same, definitely opportunity. So for names like this, especially names that run super far, super extended, and you just have that itch like, I gotta get into this stock, then when you go into the daily and probably try to wait for your 100, even maybe your 72, but definitely probably your 100 if you just like, I feel like I can't not miss this opportunity, right? So people who have been itching waiting again on Micron, that 100-day moving average on the daily, that was your opportunity. You got 2 sessions of it, and then it shot back up. So that's going to close out this on the charts here. Definitely want to show you guys the revamp to the website that I've been working on. I want to show you guys some tools that I ended up developing. But I am going to also record, I think, 2 more videos later tonight. You should see them pop up. Check them more on the charts with them. But definitely want to just show you guys the website. So this is how it looks now. On the home screen, we've got insights. Trying to go back on the weekly article thing. So this is what we're working with. And then the thing I'm really excited with is the stock research. So this is a tool that I was able to make with Claude Code. Definitely been in the Claude Code basement, working on stuff, and then basically been going down the rabbit hole. It's been an amazing experience. Very excited about it and trying to learn more and do more, build more. But yeah, so basically made a stock research tool. You put any ticker symbol in, it's going to populate how I view entry points. Remember how I talk about moving averages? It has moving averages that I like here. And then I have a stock analysis that's going to be loaded up in the background, and then a SWOT analysis that's going to be loaded in the background when this is all populated. So instead of, you needing to go look at the monthly updates to see the moving averages and all that stuff, it's already here. So it tells you the price for your 100, it tells you the price for your 200, 253, etc. on the daily. Then it tells you for the weekly. And then obviously red is showing that it's overextended, saying like, hey, it's not a good opportunity right now to buy. Extended equals wait for pullback, right? So wait for an opportunity for that name to get to a point where it's favorable. And then I'll show you some other stocks where it's going to show key level or it's going to show green, saying that, hey, it's a good opportunity to buy this. And again, this is just for price. This section here is just for price. It's not taking into account fundamentals. It's not taking into account if this is a good company. It's not taking into account financial statements, what analysts are saying. None of that. It's just strictly price. So click on stock analysis, then you're gonna get a little breakdown of what the company is doing, how is it. So obviously we have the verdict here, which is buy, confidence is high, you got valuation, financial health and growth, technicals, you got analyst sentiment, macro, taking into account the macro and sector environment, key risk, and then I have a bull case, bear case, and what to watch for. Then we have the SWOT analysis. I had an individual SWOT analysis page before for individual companies, but now I just have it being able to run when you put your ticker symbol in. Now it's just going to populate the strength, weaknesses, opportunities, and threats for you to go through, read through. Again, not financial advice. Obviously, still do your research. Just use this as a tool in your tool belt to go ahead. But I just like the fact that I was able to incorporate this into the website while you're here reading stuff on the blog or catching the video or learning a topic or whatever the case may be. You can still use this too as part of your research. Go ahead, put a ticker symbol in, and then you have the wealth capture take at the bottom. Basically, the end of the day, like what the view is on this. Long-term retail investor, the right move is to accumulate slowly on weakness. Don't chase it right now at current levels, right? Build a position in tranches. So it's like how my thesis is, how I view opportunities in the market, right? So I definitely do love that. Takes that into account. And then I'm trying to think of a company, probably Amazon might have something that it'll show some. Yeah. So same thing here. Then it'll show you slightly extended. So that means it's almost near that opportunity, right? So 6% away from the moving average on there. So I'm trying, it won't let me do it while I was analyzing. Let me see. Analyze another ticker. Oh, Microsoft. Microsoft would be a perfect one. So Microsoft, yeah, that should be all green because obviously we know Microsoft's been beat to dust, unfortunately. Let me go ahead and reload it. Oh, no. MSFT. And then you'll be able to see. So obviously all green because we know Microsoft's been beat like a dead horse. So it's going to show you how much below it is than these moving averages. So it's 15% off this moving average, the 100, 21% off the 200, and then all of it's going to basically be green, saying like it's not going to tell you to get in there, but it's like potential entry zone. It's going to flag it. And then the same thing for the 200. It's at a key level. 253. It's at a key level. So I feel like it's a pretty good tool to go ahead, dive into, use it. Um, Give me some feedback on it when you're playing around with it. You can leave it in the comments. And then even though you see that Microsoft super sold off, year to date 21% down, 5-year return is 44%. So even the 5-year return hasn't been good on Microsoft lately. But still showing you buy rating, high confidence. Again, go through it, add this as a tool to your tool belt to tap in with it. Definitely would like to get some feedback on it. What more would you like to see? If anything else I can add to the tool. But I feel like right now, I feel like it's a good one-stop shop package for you to put a ticker in. It does ETFs too as well. Go ahead and get a full round breakdown. And then you go ahead, like I said, cross-reference it with your own information. your YouTube videos you watch, whatever else other creators you follow, or people you get advice from or listen to, and cross reference it, So definitely tap into that. Let me know how you guys like it. I do appreciate you guys stopping by. Don't forget to like, comment, subscribe. Again, go to thewealthcatcher.com. So go ahead and check out those tools, check out the website, give me some feedback on it. And again, you can always email me at thewealthcatcher@yahoo.com. And it's been great talking to you guys. You guys have a great night. Peace.